Hi everyone, this is the chapter depreciation and lesson number 2, and in this lesson we are going to learn about journal and ledger with regard to depreciation. First, the journal. What are the necessary journals you are required to pass for the depreciation? Number 1, for assets purchased. When asset is purchased, asset comes in. Debit what comes in. It is a real account. So we have asset account debit to cash or bank account. Okay. Number 2, for expenses incurred on assets purchased. Now when new asset is purchased, there may be other expenses incurred with this asset or for this asset, like installation charges, transportation cost, and all those expenses are capitalized and added to the cost of assets. So you have the entry asset account debit to cash or bank account. At the end of the year, for charging depreciation, depreciation account debit to asset account. Depreciation is debit because it is an expense. And at the end of the year, depreciation is closed by transferring it to the profit and loss account. So you have the entry profit and loss account debit to depreciation account. Number 5, when the old assets are sold. Okay, so when the assets are sold, money is coming. So you have cash account or bank account debit to asset account. And when the assets are sold, asset will be sold at a profit or at a loss. If there is a profit, you have the entry profit. If there is a profit, you have the entry asset account debit to profit on sale of asset account. And if there is a loss, you will have the entry loss on sale of asset account debit to asset account. And at the end of the year, this profit or loss will be transferred to profit and loss account. So when this profit is transferred to profit and loss account, you have the entry profit on sale of asset account debit to profit and loss account. And if this loss is to be transferred to profit and loss account, then you have the entry profit and loss account debit to loss on sale of asset account. Right? Now, how to calculate profit or loss on sale of asset? Now, in order to calculate the profit or loss on sale of asset, you have to know these two value, that is book value, which is also known as written down value. How do we calculate this? This is cost price minus total depreciation will give you book value. Then you have to compare the sale proceeds. Sale proceeds means the selling price. That means the selling price. Okay. Now, if your selling price is more than your book value, then you will have profit. And if your selling price is less than the book value, then you will have loss. Right? This is how we calculate. Now we will learn how to prepare ledger. Now, normally here you will be asked to prepare only two ledgers. Asset account and depreciation account. Asset can be anything. It can be furniture, it can be building, it can be motor car, so on. Okay. Now, asset account, how are we going to prepare? We will prepare from the journals we have. Like when the asset is purchased, asset account is debit. So we come on the debit side and write down to cash or bank account. This is for asset purchased. For expenses incurred, again, for expenses incurred, you have asset account debit. Again, you come to the debit side and you write down cash or bank account. This is for your expenses. Number 3, for charging depreciation, asset account is credit. So on the credit side, by depreciation account. You have the entries here. Now, supposing this is your first year. So in the first year, there is no sale, so you don't need to make the entry for the sale. So what you have to do is you have to balance the accounts here. Let's take the total. This total will be heavier, and you will find the difference figure here. This difference figure will be termed as by balance CD. Now this balance CD will be brought forward here to balance DD, and here you have the amount. Now again we continue. If there is a purchase, we'll make the entry for the purchase to bank account. If there is expenses, we'll make the entry for the expenses again to bank account, right? And in the second year, supposing if there is any asset sold, then we'll make the entry for sale. So when for the entry for sale is cash or bank account debit to asset account, that means asset account is credit. So we go to the credit side and write down by bank account. This is bank account or cash account, whatever you have. Okay. So this is for asset sold. Now when the asset is sold, there may be profit or there may be loss. If there is a profit, asset account is debit. So on the debit side, to profit on sale of asset. If there is a loss, we'll make entry this side by loss on sale of asset. Right? Then you need to make entry for the depreciation on this asset. So by depreciation account. So this depreciation is on machine sold. Right? Then there will be another depreciation for the remaining asset. So you have by depreciation account. This is for remaining asset. We'll make the entry here. After that, we will balance this one. We'll balance this one, and here we'll get the balancing figure by balance CD. This is your balancing figure. Again, this balance CD will become to balance BD like this, and again this will continue for the number of years as asked in the question. Right? So this is how asset account is prepared. Now the depreciation account. Depreciation account. Okay. So depreciation account, where are the depreciation? 1, depreciation here 2. So first charging the depreciations. Depreciation account is debit. We come to the debit side and write down to asset account. Here you have to write the name of the asset. If there is a furniture, to furniture account. If there is machinery, to machinery account. Then this depreciation is ultimately transferred to profit and loss account. Profit and loss account debit to depreciation account. Depreciation is credit. So here on the credit side by profit and loss account. Then this is balanced. So depreciation account is closed for the first year. Then again we will continue for the second year. Again in the same way to asset account. This is the depreciation for the second year. Depreciation charge. After charging the depreciation, you will have to transfer to profit and loss account. So for second year, by profit and loss account again here. This is done. Okay. So this will continue. Third year, fourth year. So the depreciation account will continue for third year or fourth year in the same way. Right? So this is all about journal and ledger for depreciation. Thank you.